Beautiful. Well, welcome to CashPeek. I'll take you through how it works, how to navigate the dashboard, but also how to go through the process to creating a budget and then also budget to actuals. And we do have our enterprises for livestock and cropping schedules as well, and how that feeds down into the budget. But for the first thing, I'll just go into a blank business. If I look at this coming in as a new client, I just go to connect to a Xero account or a MYOB business account, click on Xero, log in, and that will bring up your data. And as long as you've been using that for 5 years, you can go back to your historicals for that. That can come into play when you're wanting to duplicate 2022 season, 23 season for the budgets, and we'll show you that a little bit down the track. As a new user to CashPeek, creating a budget. We don't have any saved in here, but this is where our budgets will be saved. Creating a budget, blank budget, existing budget, and actuals. I'll create one with you now, going back into our demo company. So blank budget is starting from scratch. You don't have any data that's coming across. This is for our legacy clients that signed up to CashPeek Basic, and that just allows you to utilize the budgeting tools and cash flow so that you do have the numbers in front of you. You can follow them up. It just doesn't overlay the actuals as well. Existing, for any budget that we do have, we can select what that may be. We can create a budget for a scenario that we're wanting to run, good season, poor season, expanding the farm, or even selling, looking at equipment, what leasing model might look like for you, what does cash flow, or even hiring someone, what will that impact my cash flow? But most of the time, actuals is where the money is at. If we want to bring in 2025 being the following year, the year prior, sorry, and then we have, if 2026 is lining up the same as 22, quite wet, and then we can plug in that as well. So if we look at creating as our first budget, master budget, CashPeek pastoral. We'll start this in July because we're being proactive. You can duplicate your budgets and then start them from whichever calendar year, cropping year, whatever you may do, but also for your advisors, they can swap it into the financial year as we've done here. Bring across the codes from your Xero or MYOB. Settlement frequency, 0. What's accrued in the current period, we'll just zero these out for the example, ensuring that all bank accounts have their associated interest rates on credit or even debit. You can leave them as working accounts, January as the first payment, and then when are they repeating? Monthly, quarterly, half yearly, or yearly? This one's for monthly. If I'm looking at adding in any equipment loans that we want to track within budget, we can do so. Tractor, half yearly, whatever your repayment cadence is on that. If we do have multiple pieces of equipment on the same rate, and then we can pull them together as well. If we left this blank, it wouldn't allow us to finish the budget. So it improves the accuracy of the budget as well when you do get into reporting side. And then down the bottom, for this equipment tractor, you'll need to start opening balance for this as well. For a $500,000 tractor, that can be done these days, and then ensuring that our opening balance, 560 on our ANZ fixed rate loan number 1. We've got 200 on our loan 2, and you can go through, add them all in as well. For these bank accounts, because they've been brought across from actuals, they can't be deleted, but for ones that we add in manually, we can then delete those if we pay them off or we don't want them within this budget. If you duplicate it, you'll bring that across and we can delete if need be. So now that we've finished creating a budget, we can then go ahead to save that, and there we go. We've removed the friction totally to improve the speed to budget, which before has really held back people on establishing just a basic budget into it and then looking at the assumptions for revenue and cost throughout the year, what their enterprise can and can't do. And then once you have an initial master main budget, you can create scenario budgets off the back. And that is where the management accounting really comes into play. But for this, you can translate what's happening for the clients, or you could run these within the courses that are applicable as well. So looking at the budget, I'll take you through a couple of the features. With crop receipts or any category here, we can add in straw sales because it was missing from the budget in July. Because it's midwinter, we want to offload 50,000 in July. Possibly if you want to add context, we could add a work table, add notes to that, maybe a reference to what the 50,000 was, who we expecting to sell to. Everyone uses the notes tab a little bit differently. And then we do have full year as well. So if you're selling straw throughout the year, you can direct entry here, but then we'll also do this within our cropping schedules as well to come. So that will automate the data entry, what it will look like, add notes, your hectare, your yield, and then dollar to ton. If you have a note, it will come up with a tag. And if I put in barley straw, 250 hectares of it, yield was 330 a ton. And then possibly if you're going through the work table, you could delete that entry and then you just have your work table and fulfilling your notes here, what it might look like. Now that you do have a work table, have an equal sign and a tag attached for notes as well. So for any of the codes that are missing in the table, you can go ahead and add them. It goes up as well, which is important to mention, livestock receipts. We want to add in sheep sales and our wool sales, and then we can add that to our budget. Another nicety for CashPeek is working with all codes. If we are missing codes that are coming across from our Xero or MYOB, and nothing was in the actuals when we first built this, and then we can have a look to see what we are missing. Is field peas in our rotation? Canola, will we have any on hand throughout the year? And then you can plug in your data, your figures to understand that. And that goes for the same across all of them as well. So for cartage, we don't actually have anything in the budget for cartage. Maybe you need to put that in as well so you don't miss anything. Code mapping. If I tick that, that just allows the end user, the farmer, the small business owner to understand that malt barley or their code that they use in Xero is barley sales. And it really streamlines the reporting coming out for the budget to actuals, and then if they go further on into benchmarking as well. If I fill from actuals as we did before, it will look like this. We can select what month, what year, and then when do we want that to as well, going out to whatever period that you like. They can fill that in, what it looks like when we print a report. So there's different types of ways that we can print the report or export as PDF. We do have our dynamic peak. So if I put color on, you can see a month of actuals, or we can see 12 months of actuals coming across. In mind, we don't have actuals for June 27 yet or July 26. So that can come up and you can put that into your reporting, which is quite handy as well. We can, for those that hard of seeing, you can improve the font. Mind it does play around the pages. If you move to landscape, you could fit it all on. Low ink, black and white, and we have the ability to add our notes, schedules and allocations to the bottom to really fulfill and add context to our reporting. For this, I'll just slide down. We've got a bank account in here as well. The opening balance, closing balance, the interest applied, transfers and net cash movements. Schedules, allocation and notes will come up here. Bear in mind, we don't have these in yet because we haven't created one for this budget, but we'll go ahead and we'll do that now after a couple of things. So dynamic peak as well as the feature in when we went to go to print, it is really good to see how you're tracking once actuals come through, and you can blow this out into 12-month period or just look at 5 months ahead, whatever it may be. So if I look to compare budget to actuals, you can change the period, July 26. So that's doing 1 month. If I look at July 26 to December 26, what those figures look like and see the performance of what we've done. There's not too much of a disparity between the figures with this demo. But once you plug and play into client files or to your own file, you'll be able to see the difference and how they match up as well from the starting and to the closing balance. We can print this report as well. It is really good, maybe for team meetings or with advisors, accountants, and also banks. The ability, just as before, including notes, schedules, and allocations. Now I've showed you most of what can happen within the budgets. Viewing notes, you can view all of the notes in the same spot, just so you can refer to, maybe you need to amend them for your assumptions here. Our view schedules, these are our enterprises, and now we need to actually create a schedule. But I'll go back one step. So when we set up our business, we want the name, ABN, main business activity being agriculture, what type of farm they are, whether they're mixed cropping, horticulture, or livestock, and we do have dairy to come. We do have other business areas that they can utilize if it is connected to this file. If not, you would need another CashPeek account for separate Xero MYOB files as well. But here are our enterprises. If we want to create a new enterprise, I'll create a livestock with cropping coming next week. Sheep, sheep commercial, and that will take us to the defaults for this enterprise. Now, the defaults will include all of the pre-filled classes. You don't have to keep all of these classes. If we don't grow our wethers out to hoggets as terminal breeds, we can delete that. We can add them back in, and we can play around with the parameters, trades, costs, and productions. With our defaults, we have a birth rate of 100%, death at 5%, start count plus 5% of purchases, and you can go through and amend that, get it tighter to what your business is. If your death rate on the start count is 1.5%, and then that will change how it feeds back down into your budget with your inventory levels as well. If we look at sheep purchases, understanding what the client code is for that, you can turn this off if need be. And then what proportion of the population is it allocated towards? 100% or is it 60%? 60% of purchases, account, end count, what that may be. Submit, and then we've changed that. We've changed our death rate. Looking at shearing or mulesing here, the client code, what that may be. You may allocate it a little bit differently for your own enterprise or for client enterprises. So mulesing, 97% of the start count is getting mulesed. Look at wool sales, 97% of wool sales across the population formula. Can turn that off as well. So how you want to configure your parameters and your classes within your enterprise will really be tailored to the individual and their business as well. We can view archive classes as well. If we wanted to create a new class, we could see what that looks like as well. Now that we do have this enterprise created, if I go back into my budget, look at my schedules, and then we have create, and then it moves to view once you have input some figures. Now it includes all of your classes, mated use to cull use, starting count, purchases, sales, how many are mated, transfers out and transfers in. Now for anything that you do transfer out, it does need to be transferred back into a class. Say for ewe lambs would transfer up into ewe hoggets, and then ewe hoggets would transfer up into your ewes as well. And your wether lambs would transfer up into hoggets. We do have the allocation tables below for sheep sales, mulesing, and wool sales. If we plug in 10,000 mated ewes, purchase 500 a year, we looked at sell 2,000 surplus, and we've mated 8,000 for our own birth on farm, allowing for the death rate of 1.5% at 210 units as well. So before transferring, we have the ability to transfer in and out 16,290. If I look at ewe lambs, 0 purchases, 4,000 in sales, and 1,000 mated at 10 to 12 months, we'll look to transfer in 2,000 up into our ewes. Now that I haven't balanced this out and added in transfers in, it does notify me that there is an imbalance within that. If I add in 2,000, and then it does adjust and comes across. Once you've infilled all of this, you can look at your totals to see what your inventory is on hand at the start and then also at the beginning. And then you can try to model what that might look like within your budget and how that will impact your cash flow. If we set up our schedule at a schedule level, it will only do it for this budget. It won't do it at the business level. Before, when we set up the parameters, that was at the business level, and now we can refine the schedule defaults for this. This is important when we're building scenarios. If you're playing around with your def rate of 2%, 1.5%, 5%, or even across different elements, and then that can be your experiment when you're modeling out different scenarios. Scenario A, B, C, D as well. You can add classes to this schedule if you're missing them or you want to roll out a scenario, see how that plays out. Now that we have built a schedule, I'll show you quickly again how that looks in the reporting. So that can come across. We can also remove that. We'll go back and we will allocate this as well. Once the schedule is built, you'll have the ability to allocate. And because we had built in our schedule 2,000 ewes to be sold, 4,000 ewe lambs to be sold, and allocating as a percentage formula across the year, what that will look like for your business as a cash position. So the 2,000 in early spring, we want to offload 80% and we'll hold on to these remaining 20 until after Christmas. And then maybe for the ewe lambs, we will do the opposite. What outcomes we achieved from these, because we did have the different allocations, each scheduled outcome will need its own pricing, obviously, because you're going to attain a different price at point of sale, 250, 340. For this, you actually went down, but modeling what that would look like for your 6,000 total sold. Once you have input across all of your classes, you'll get to understand and then draw that down into your budget, what that will look like. Now that you have your sheep sales for September and then also February dropped into your budget easily like that. Now it's in our work table, and that just lessens the data entry needed to build a great budget and even better cash flow. That is CashPeek. Hopefully you got something out of this today and that you can really start to remove the friction within your business to creating a budget and actually knowing what your cash flow is, having that visibility and referring to your budget throughout the year.